All right, everybody, welcome. We appreciate you spending your Saturday with us. I'm going to get this started right away because I know you don't want to spend your entire Saturday going over the funnest thing in the world, which is taxes. One of the things that Travis and I want to say, and Travis is going to be your guide today. One of the things that Travis and I want to say is this is absolutely not any disrespect toward Notary Assist or Gwen Hill to redo this session. We had so many questions that went unanswered in the chat. We were so lucky to get them for the 2+ hours that we had them. There were so many questions left in the chat that we wanted to make sure that you guys got those questions answered. Travis went through and uh, combed the chat, pulled out all of those questions, and also some of the ones that came up that he wanted to make sure to clarify. So I'm going to turn this meeting over to Travis. If you guys don't know Travis, he is my business partner at Unlimited Ink and Notary Stars, and he's our accounting guy, and he does all the numbers. He does the hard work. I just do training. He does the hard stuff. So Travis, I'm going to pin you up and let you take this off for us.
All right. Thank you very much, Ronnie. Hey, good afternoon, everybody. I'm Travis. I'm the Director of Operations at Unlimited Ink. And yes, I run our accounting team as well. So we had a great session the other week, and I just wanted to do a follow-up and simplify a lot of stuff for you because it's really hard to sit in on a lesson with taxes and really digest it all. So today's lesson is more so going to be focused when it comes to taxes and bookkeeping as a notary. So I'm not going to really get off topic with other professions and as such. This is more for you as a notary, as I have been filing taxes as a notary for about 3 or 4 years now. So I'm going to share a lot of the information that I have learned along the way. And before I get started, I do want to declare I am not a financial advisor. I am not a CPA. You should always speak to a professional in that industry when filing taxes and for sound advice, and you're welcome to confirm with them any of the information that I relayed. So please, anything that I put forth today, always confirm it, with a professional, okay? Okay, so let me get my presentation up here. Yes, okay. Okay, and I'm pretty sure we have everybody's mics muted and I believe the chat muted. So if you would hold off on any questions until the end of the presentation, as I really want all of you to listen, because I may answer a lot of your questions, as we go through. So here is our lesson today, Taxes Simplified. All right, so beginner tips. The first one that I recommend is get a standalone bank account. Open a separate checking and savings account for your business. If you have not formed an LLC, that's okay. You may still be able to open a business account. If you cannot open up a separate business account, open a separate personal account for your business. A separate bank account, that will help you keep your business expenses and income from getting mixed in with your personal account, and it makes for easier bookkeeping. So again, whether it's a business account or another personal account, I recommend having a standalone bank account that is different from the normal one or ones that you use day by day. I recommend having at least one checking and one savings account. The savings account is a great idea, as you can transfer money into it in preparation for the income tax you owe. So it's like me, my business account, I have one checking, one savings. Every time I get my check, there's a certain portion that I allocate into my savings account in preparation for my quarterly tax payments. All right, beginner tip number 2, bookkeeping software. Purchase bookkeeping software. This is a must. This keeps you from having to manually record everything. I recommend purchasing bookkeeping software that has a focus on notary bookkeeping, like Notary Assist. Now, to sidebar a little bit, I didn't know about Notary Assist or other notary bookkeeping software before becoming a notary, and I have used QuickBooks Self-Employed since my adventure into the notary world, and that software works fine. But one way or another, definitely get bookkeeping software. You don't want to try and log all of this stuff manually. bookkeeping software, it comes with great automated tools. It can link to your bank accounts, your debit and credit cards for easy reconciliation. And the longer you use it, the more automated it becomes. So I've been using mine for a few years now. And at the end of the year, when I go through everything, there's very little that I have to reconcile. So for instance, if I have a, let's say I have a charge to a restaurant, like, I don't know, Filiberto's. I can automatically set that as a personal expense if I feel that's never going to be a business expense or a write-off for lunch and such. And what happens is when that bookkeeping software scans your debit and credit purchases and your deposits from your bank account every day, what it's going to do, it's going to recognize that charge and just automatically allocate it as a personal expense. Or for all of you, if you renew your NNA membership or purchase anything from the National Notary Association every year, once that first charge comes through, there's a little selection that you can select, and you can mark that as a business expense. So every time that comes in to your bookkeeping software, it automates it and puts it as a business expense. So you don't have to go through it every time. Now, the first year that you do it, there's going to be a lot of programming and such, but the longer you stick with it and the more you set those auto triggers, just the more automated it becomes, and it gets easier year by year. Now, some software, some bookkeeping software comes with an automated mileage calculator that will track your driving trips. You can classify each trip as a business or a personal trip. If the bookkeeping software doesn't come with something like that, that's fine. There are standalone apps like MileIQ you can use. All right, accounting methods. First one, accrual accounting. Now, again, especially when we get to the Q&A session with the accrual, I am not an expert on this by all means. I've never done accrual accounting for myself. I don't even do accrual accounting for Unlimited Ink. Our software does record it, but again, this is just to give you an idea of what is out there. So accrual accounting. So it's recording revenue when the sales were invoiced and the expenses when they are incurred. Payment or expenses for the transaction do not have to be received or paid for this method. Cash accounting. Revenue is reported when cash is received. Expenses are recorded when they are paid. Now, basic bookkeeping software, it may not record accrual. You can generate a report in your software, though. It's called a profit and loss statement for cash and or accrual if your software does come with that. I think with QuickBooks, self-employed, I don't think it records accrual, and you have to upgrade to QuickBooks Online. Now, keep in mind, these are just two accounting methods. Right now, it has nothing to do with tax filing. The next slide will. So tax filing methods. You have the choice to file taxes on an accrual or a cash basis. It is your choice. Now, most of you are going to file on a cash basis. Again, speak with your CPA, financial advisor, have them, look at your business and your books. But, I have never found a reason to file for, accrual. So accrual filing, most large companies that have high revenue streams use this method. And the IRS requires companies to use this method if their business structure and revenue meets certain thresholds. I don't know what they are exactly, but I believe if you are a publicly traded company, you're required to file accrual. And I think if your business is grossing like 25 million or more, you have to do it on an accrual filing. I doubt anybody in here is going to be required to file on an accrual basis. Cash filing. So it's very common filing for small business owners and is more than likely what will be recommended for your tax filing. Again, speak to your CPA, but more than likely you're going to do it on a cash basis. So keep in mind, there's two types of accounting methods. There's probably others, but these are the two most popular. It's two types, but when you file taxes, you can file as accrual or cash. So accrual versus cash example. Again, these numbers are completely fictitious. These are just kind of give you an idea of how these work. So accrual, you issued $200,000 in invoices. Now keep in mind, you just issued $200,000 in invoices. Has nothing to do whether those are paid or not. Then expenses, you had $40,000 in expenses in 2023. So your net, which is subject to taxable income, is $160,000. Now, throughout this lesson, you'll see that I've put subject to taxable income. Keep in mind this number here, there's going to be other variables that are going to impact this number that may raise it or lower it when you get taxed on your 1040. So cash accounting. In 2023, you had $100,000 in paid invoices. So your title companies and your general notary work, they cut you checks and you deposited $100,000 into your account. You had $20,000 in expenses. Your net is $80,000, which is subject to taxable income. So I saw this question in the chat. So special note, paid invoices can be from the prior year in 2022 or 2021, 2020. Expenses will be included even if you have not been paid for the invoice issued in 2023. So what you want to keep in mind with, a cash filing or cash accounting, like all your books really look at is how much money went in to your business and how much money went out of your business. So pretty much what was deposited into your checking and or savings account and how many business expenses were deducted from your debit card or your credit card, however you write payment, checks, money orders, whatever it may be. All right, next we're going to get in some tax documentation. So these two pieces of tax documentation you've probably heard of. First one we'll talk about is the W-2. It's issued when you're an employee of a company. Federal, state, Medicare, and Social Security tax are already withheld. You will not receive one of these as a notary, unless you're an employee of a signing service, but probably not. So keep in mind when you get a check and that check, let's say it's $3,000, your employer has already taken out federal tax, state tax, if you pay state tax, Social Security, and Medicare. And then at the end of the year, when you file your taxes, you get a refund if your employer took out too much, and you have to pay more if they didn't take out enough. So the 1099 NEC, I'm just going to call it a 1099 from this point on, but the 1099 NEC, that's what you're going to get issued as a notary. So it's issued by a company when you are a private contractor for them. No income tax is withheld. This is what you will receive from title signing services you do work for. So the key with the big difference between these two is federal, state, Medicare, Social Security, taxes withheld. With the 1099, no income taxes withheld. So you want to know the difference between those two. This is an example of a 1099 that you're going to get. Very, very basic form. It's got the signing service information up here, their TIN number, your TIN number. They're probably going to draw that from your W-9. So keep your W-9 updated in your profiles, please. Here's your name here, your address, the tax year, 2023, non-employee compensation. So that's how much they're paying you. So you made $100,000. That's really going to be our magic number today because it's a big round number. Down here, federal income tax withheld, state income tax withheld, 0. Now, if nothing is printed, even if a 0 isn't printed here, don't be alarmed. I don't think they print anything, but I just went ahead and marked a 0 so it stands out. Again, you made $100,000 in 2023, and it's showing that no federal tax and no state tax was withheld at all. All right, 1099 NEC. So businesses are only required to issue you a 1099 if their sum of payments to you are $600 or more. This is why proper bookkeeping skills are important, so you can report income on your tax returns that you received from companies that are not going to issue you a 1099. If you receive a 1099 and the gross amount does not match your books and you have verified your books are correct, speak with the contracting company and with your tax preparer for assistance. Do not rely on receiving a 1099 to calculate your annual income. Proper bookkeeping should always be the primary way to track and report your income. All right, because I've had variances on my 1099s, and my tax preparer, she just stated, just go ahead and go buy your books. The IRS writes you a letter, we'll go ahead and deal with it then. But, again, if you have done jobs for a company and you're not getting a 1099, check out how much you made with them. You can ask them to send you one, but they're probably not going to, because it costs us money every 1099 that we issue. And here at Unlimited Inc., we have a lot of contractors around the nation that hasn't done $600 or more, and we're going to save the money and we're still playing by the rules. But again, keep track of your books. And if you get a 1099 telling you that you made $40,000 in 2023, but you made $60,000 in 2023, you want to address that with your contracting company because they make mistakes too. Okay, so tax filings for self-employment, a Schedule C. This is what your CPA will more than likely use to report your self-employment tax. Tax payment responsibilities for taxable income. So on your gross pay, you're going to get taxed at the federal level, the state level, if you have state income tax, and a self-employment tax. So this is unique to self-employed individuals as yourselves, as you do not pay a Social Security tax and Medicare tax like W-2 employees. So this is where they stick you with that. And now I'm going to pull up an example of a Schedule C. Let's see, stop. Okay, so this is a Schedule C. This is one that I did up. Again, yours might look a little different, but the format of it should look the same, but all of the deductions and everything might be allocated in different places. But very basic form. And if you have filed taxes as a notary before or self-employment, pull this up and pull your tax return out. I highly encourage you to kind of try to pick it apart and figure out how it's all calculated. It's really not that complicated. So up here, that's going to be all of your information. In this section down here, you can see this box. Checked right there, accounting method. So they're filing for you, or me, I guess in this case, or the fake Travis, as a cash accounting. If it's accrual, they're going to check that box there. And from what I've read online, you're not supposed to be bouncing back and forth between cash and accrual every year. You're supposed to be sticking with one. But again, you all will probably be filing on a cash basis. And then it's going to ask a few other general questions. Did you materially participate in the operation of this business during 2023? Did you acquire the business in 2023? Did you make payments in 2023 that will require you to file Form 1099? You're probably going to check no on that unless you are subcontracting out and you are issuing another notary or another service a 1099 for payments that you gave them. All right, part one, this is really where your gross income is. I'm not going to go over these line by line, but it all works out to be $100,000. That's our magic number today. So part three is expenses. So those are your deductions, your write-offs, expenses, deductions, write-offs. It really means the same thing. So I had $3,000 in advertising, $3,000 in legal and professional services, $1,000 in office expenses, and $4,000 in travel. So that's where they're going to put your mileage. Part three, all added up, is line 28, $10,000. You're going to subtract that $100,000 from your $10,000 expenses. Let me move this up here. And it gives you your tentative profit or loss. So $90,000. Line 30, that's where your CPA is going to ask you the square footage of your home and what percentage of your home you use for business. Be honest about that. And they're going to calculate it. So I get to save $1,000. Line 31, that's the magic line. That is your net profit or loss. So that's how much is subject to taxable income. Now, when your CPA puts that on your 1040, there's going to be additional deductions, more than likely, like a standard deduction, maybe for child credits, whatever it may be. But this resembles the profit and or loss of your business. If there's a minus sign in front of that number, you had a loss. Okay, let me get back to my presentation here. Okay, so another form of tax filing is an S Corp, 1120s. I am not an expert on this whatsoever, but I wanted to throw it in here in case any of you are ambitious to go and research this. I know enough about it, but not enough to where I'm comfortable really communicating that to you. I would highly recommend speaking to somebody that has the utmost expertise in an S Corp. But you file 1120 tax returns, they're business returns, and then you get a K1 as well. But this is another tax filing common for small businesses. It has additional tax benefits when it comes to the self-employment tax portion. Again, speak to a CPA or research on your own to see if this is a fit for your business. I have never filed as an S Corp. Okay, so what is a deduction write-off? So a deduction, it's an allowed business expense by the IRS that you can deduct from your gross income. The deductions reduce your taxable income. So that's the key word right there. What do deductions do? They reduce your taxable income. So here's our example. 2023, my gross income was $100,000. So all the signings and notarizations I got paid for, $100,000 hit my checking account. However, in 2023, $20,000 in business expenses in 2023 exited my checking account. What is our magic number now? $80,000 is subject to taxable income. So that's how a deduction works. Because I've seen that online, people say, oh, I had $20,000 in expenses. That means I get to save $20,000 in tax. Absolutely not. So again, deductions reduce your taxable income, and this is the easiest way to explain it. You made $100,000, spent $20,000, you have $80,000 in profit. That's what's going to be subject to income tax. All right, high impact deductions for notaries. Guys and gals, I am not going to go over every single deduction that you can write off out there. But these two I find to be the biggest money savers when it comes to deductions for a mobile notary. Number one, mileage. The IRS allows a deduction of 65.5 cents per mile in 2023 allowed for your deductions. And I believe they upped it in 2024. And please, anybody, if I got it wrong for 2023, please forgive me, but I'm pretty sure it's the 65.5 from what I've researched online. You may use the complete trip for each signing to the signing location, to FedEx, UPS, back home, or to the next signing. If your job is causing you to drive, that's okay to use that mileage. But be responsible with it. If you sidebar and go to a store and do some personal stuff, or sit down and have lunch with some friends, you want to make sure you're allocating those automatic trips that those mileage calculators run up as personal instead of business. But this is why having an automatic mileage tracker is a must and makes tracking mileage easy. You're welcome to do it manually and log it, every time you drive, and write out how many miles your car started with and how many miles your car ended with. But I prefer automation as it's a lot more hands-off, and at the end of the day, I can swipe left and swipe right as a business and a personal expense and be done with it in, like, I don't know, less than 5 minutes. Okay, I know this is the one you're all waiting for here. Notarial acts. So each notarization can be declared exempt from self-employment tax. You still pay federal and state tax. Again, I want to stress that each notarization can be declared exempt from self-employment tax. You still pay federal and state. Below is a statement from the irs.gov website concerning this. All right, notary income. Fees for services you provide as a notary public are not subject to self-employment tax. However, all of your other self-employment income is subject to self-employment tax. So example, I'm going to put my name in front of the X just so it reads a little bit better. So example, X is a self-employed attorney. No, I'm not. I'm just putting my name in on that X. So anybody watching the replay, I assure you, I'm not an attorney. And also a notary public. Only the income that Travis received for services performed as a notary is not subject to self-employment tax. And then I've got one more form from the IRS. And guys and gals, when you go out and research this stuff, you want to find credible sources, right? The first place I go to, especially at Unlimited Ink, when I'm looking for like notary guidelines, if a notary can do this, a notary can't do that, or like this class with taxes and such, I go to the authority's website. So for the notary stuff at Unlimited Ink, I always go to the Secretary of State. You know, I'm not going to John Jane's law office and reading their text. You know, I will go to the the authority that publishes this stuff. So this is publication 17 of the IRS. You know, it's like 400 pages or so. I just clipped out the 2 pages that relay the notary information. And guys and gals, I found this just by Googling it. And, you know, be smart with your searches too. You know, do you want to read all 417 pages? You know, just open up the searchable PDF, hit Control Find, put in notary, and it'll take you to the pages that you need to get to. It's really easy to find. So the first section says, fees or services include all fees for your services and your income. Example of these fees are amounts you receive for services you perform as a notary public. Then it goes on to say on the next page, notary public. Report payments for these services on Schedule C, Form 1040. These payments aren't subject to self-employment tax. See the separate instructions for Schedule SE, Form 1040 for details. What does this mean for you? When you file taxes and your tax CPA tells you to upload all the documents that you have, upload this one and explain it to them, because a lot of CPAs do not know about this exemption. You know, you have to guide them, but take this and explain it to them and they will know how to file it on your return. If not, they're probably going to speak with one of their managers. I guarantee you somebody at H&R Block and TurboTax is going to know how to do this. Okay, and back to my slide here. Okay, so self-employment tax exemption for notarial acts. Of course, I'm going to give you an example. So state allowable charges for notarial acts. You want to understand what the maximum amount your state allows for a notary to charge for a notarization. Okay. So number 1, Travis Notary Star, lives in Arizona. Arizona has a maximum allowable fee of $10 per notarization. So that's the information that you want to know first. How much does your state allow for you to charge for a notarization? What's the maximum number? Number 2, Travis grossed $100,000 in 2023 with real estate closings and general notary work. So $100,000 hit my checking account. Number 3, Travis executed 1,000 notarizations in 2023. So all those jobs that gave me $100,000, my notary seal went down 1,000 times. Number 4. So you're going to take 1,000 notarizations, multiply it by 10, Arizona maximum allowable. Obviously, if you're in a different state, you're going to want to multiply it by your maximum allowable. I mean, you can do less, but take the most. $10,000. So 1,000 notarizations times $10, that's $10,000. So number 5, now $90,000 is subject to federal, state, and self-employment tax, and $10,000 is subject to federal and state only. So I'll kind of go over that again. Arizona allows me $10 per notarization. I made $100,000 in 2023. I had 1,000 notarizations in 2023. 1,000 times $10, which is the maximum my state will allow me to charge for a notarization. That equals $10,000 out of that $100,000 that I only have to pay, that is only subject to federal and state tax only. Again, income figures above are completely fictitious. There are other variables that will impact the taxable income on your returns. All right, I wanted to sidebar just briefly on this because I used to work in lending for years. Guys and gals, I broke a lot of self-employed borrowers' hearts, okay? So the downside of deductions, mortgage application rejected. Deducting your expenses can cause challenges when purchasing a home. And I just want anybody in this world that is self-employed to know that. So profit and loss, that line 31 on your Schedule C that we looked at, your profit and or loss, that is the meat and potatoes of how a lender calculates your income when purchasing a home. Deductions reduce that line 31, profit and loss, on your Schedule C. Always remember that. Deductions reduce line 31. Typically, when purchasing a home, the lender must use taxable income, and deductions are not taxable as they reduce your taxable income. And deductions continued. Some lenders may be able to add back in certain deductions. Mileage is a popular one that I've seen, and that they might be able to add back in. However, not all of it may be able to be added back in. So I know that probably sounded super confusing. So let's just say you had a deduction of $20,000 in 2023, and the lender allows you to add some of that deduction back into your profit and loss to use for income. The lender may say, well, we can't add the full $20,000 in, but we can give you $10,000 of it. So speak to a loan officer or lender for specifics about that. And you might want to call a couple of them because they might operate a little differently on how much they can add back in, if any. In tax returns, when you apply for a home as a self-employed borrower, your form of documentation you send in for proof of income are your tax returns, because you are not a W-2 employee. You don't have pay stubs. You don't have a W-2. You don't have an employer where the lender does a verification of employment and income with. And typically the lender wants 2 years of tax returns with consistent or growing income to qualify you. And that's where a lot of self-employed borrowers, that we had to turn away. It's like, and guys and gals, we turned away, doctors, lawyers, like high income professions quite a bit. It's like the gross income is $250,000, but their CPA is so amazing, and they're writing off $200,000, and they're only netting, $50,000 on their profit and loss statement. That's what lenders can use as taxable income. It doesn't matter how much you gross. And again, that all goes to lending regulations and what lenders are allowed and not allowed to do by the federal government. Just keep that in mind. If you're looking to buy a home and you are self-employed, You'll need 2 years of tax returns, and typically the lender is going to want consistent or growing income to qualify you. Where it used to hurt borrowers is we would have, say a 2021 return with $100,000 in income, and then a 2022 return with $20,000 in income. That's a big decrease. And, sometimes the application will get rejected or we'd have to average it. But anyway, I can go on and on about this. I can, teach a whole month lesson about this part right here, but I just want you to be mindful of that, because if you are looking to buy a home, you do want to consider how much that profit and loss number is on your Schedule C, because that's what the lender is going to be looking at. All right, the IRS. It can't be bargained with. It can't be reasoned with. It doesn't feel pity or remorse or fear, and it will absolutely not stop until you pay your taxes. Guys and gals, don't be scared of the IRS, because I'm going to give you some stress relieving tips for taxes and to keep the IRS off your back. Number 1, pay quarterly estimated taxes. Paying quarterly taxes helps relieve the full tax bill that you would get when you file your taxes at the beginning of the year. If you overpay the IRS or state tax authority, they will issue you a refund of your overpayment. If you do not pay quarterly taxes, you will get stuck with a penalty at the time you file. Now, I don't think the penalty is a whole lot. You can go online and try to figure out the calculation of it. I didn't feel comfortable trying to communicate that, but pay quarterly taxes. And it's really easy. You just go on the IRS website, and there's a little link right there, and go in, you put in your bank account, and they take like the money the next day. All right, practice financial self-control. Now, this goes back to having a savings account and using that to allocate funds in it every time you get paid for taxes. Always keep in mind the money you are receiving as a 1099 private contractor, it is not taxed. Danger, danger, okay? And I'll read this one again because I really want to get this one out to you. Always keep in mind the money you're receiving as a 1099 private contractor is not taxed. So this is why I really encourage all of you to pay the quarterly taxes, because if you're allocating a certain portion for tax preparation, you hold on to that for the whole year. It's hard when you have, $10,000, $20,000 like sitting in your bank account, like tempting you to spend it. We all like to buy things. When you pay quarterly taxes, the money's out of your account and you can't get it back. Just pay it. It's done with. You're going to have to pay it anyway, and you don't ever have to worry about looking back. 3, be honest on your returns. Do not omit income and include deductions that never occurred. If you get selected for an audit with the IRS, you will have to provide proof of your income and deductions. Audits are not fun, but they can be easy if you were honest with your returns. Now, I have never been audited, but I assure you, anybody that's been through one probably never had a good time and said, boy, I wish I can do that again. So just be honest on your returns, because if you do get audited and you do have to provide proof of everything, you have that peace of mind that you're not going to get in trouble. All right, so the IRS state tax audit. So everything up to this point in this lesson is to prepare you for an audit. Very few of you will get selected for an audit. The chances are low, but it can happen. You can go online and watch information, read information on like what deductions and what things can increase your chance for an audit. But, the chances are low, but then again, it can happen. I have known people that have been audited. If you get audited, the IRS or state, they can verify your income, deductions by having you send in bank statements, mileage trackers, expenses, your books, whatever they feel necessary for you to send in. to prove what you declared as income and deductions on your tax returns. It's just like buying a home, right? You tell your loan officer, "Hi, I make $100,000 a year." Now the underwriter says, "Okay, I need you to provide me documentation to prove that." If you cannot prove what you filed on your taxes, you will have to adjust your tax returns and pay any additional tax and possibly penalties that may be incurred. So again, just be honest on your returns. You'll sleep a lot better at night. Okay, so we're almost to the Q&A session, and I'll stick around to answer all of your questions, as I'm sure you're all going to have a ton of them. But I know paying taxes isn't fun, guys and gals, but we all have to pay them, right? Again, with this next slide, I am not a financial advisor, but I would encourage you to speak with one, because you lose money to taxes, but there are ways to get some of that money back. Okay, and I'm sorry, I guess I got ahead of myself, so I have one more slide before I get into the last one. But communicating with the IRS, letters. The IRS will send you a letter in the mail if there is an issue, if they are reaching out to you for other means. Beware of scam phone calls and emails. This is not how the IRS will approach you. You will get a letter. If you get a phone call or an email, a text message saying it's from the IRS, delete. The IRS will always approach you with the letter. I think the only verbal communication they will do with you is if you call them on their IRS hotline. You cannot hide from them. Do not avoid written letters from the IRS stating you owe them money. They will keep sending them and eventually take action against you if you are unresponsive. Adverse consequences for doing that: levied bank accounts, liens on property, and other legal action. If you're communicating with the IRS, they will not do any of the above. If you owe back taxes, or if you don't have enough money to pay the taxes you owe this year, they will just set you up on a payment plan and leave you alone. As long as you're, making that monthly payment, no questions asked. They're not going to throw any liens on your property, levy your bank accounts. They're going to leave you alone because you've agreed to pay them on that payment plan. Yes, you're probably going to have to pay interest, but again, make sure you check your mail. If you're one of those that checks your mail once every 2 months, you might want to check it at least twice a month because you are self-employed. And just to give you a little a story, excuse me, that happened to me, I think my first year filing as a notary. Got my self-employment tax exemption for my notarial acts. Well, I get a letter in the mail, and I believe the IRS told me I owed an additional $4,000 to $6,000. And I looked at everything and I showed my CPA, and she's like, "Oh, well, their auto audit system probably recalculated it. Go ahead and just write them a letter and explain to them, hey, you're a notary. This portion should be exempt from the self-employment tax. Send in the article and any documentation, showing that you qualify for this, and they will adjust your return." It took a while to hear back from them, but they eventually adjusted my return. So don't freak out when you get a letter and it says you owe them a bunch of money, because they're human beings too. They can be wrong. Sometimes their computer algorithm, they might adjust your taxes wrong. Read it, show it to your CPA, and then you're going to have to write a letter back to them explaining, and then they'll write a letter back to you giving you your decision. Okay, so again, you've paid a lot in taxes. There are options so you can, recoup some of that tax money. This is one of my favorites. Taking control of your finances, learning how to make the most out of the money you earn. Again, guys and gals, speak to a financial advisor, but here's a couple of popular products that a lot of people take advantage of. Number one, a traditional IRA. So you may contribute pre-taxed income into a traditional IRA. And all a traditional IRA is kind of the non-employee version of the 401k. You know, there are a lot of other differences between the two, but as far as the money you contribute into it, they're both pre-taxed income. Now, please note, when you reach the age where you can withdraw this money, you will have to pay taxes on it at that point. But here's the advantage of the traditional IRA is your annual contribution can be deducted from your taxable income. So in 2023, for me, as I'm single, not married, I was allowed $6,500 to contribute to my IRA. And what my CPA does during tax season, they go, okay, how much did you contribute to your IRA? $6,500. They put that on my tax return, and it reduces my taxable income by that $6,500. In 2024, it's being raised. I believe for a single, it's $7,000. For a married couple, just Google it. It's really easy information to find online. I just know it for myself because I'm not married. Okay, another product is a Roth IRA. You may contribute taxed income into a Roth IRA. Now, the big benefit of this one is you don't pay tax on the earned money when it is eligible for withdrawal. Now, the drawback of it is if you contribute, $6,500, $7,000 into a Roth IRA, that cannot be included on your income tax return as a deduction, only the traditional IRA. The other one is a brokerage account. So you're free to buy stocks, ETFs, futures, commodities, whatever the US stock exchange, foreign stock exchange exchanges offer. Now, there's no tax benefit as all the contributions are post-tax income. And your brokerage company, like Robinhood, that's a popular one, will issue you a 1099 at the end of the year. So if any of you get savvy at all with investing, or have a financial advisor open up a brokerage account for you so you can buy individual stocks, ETFs, whatever it may be. Just keep in mind, anything that you sell off, any profit that you gain, you get taxed on that. And the taxes are different with how long you hold on to the shares for. So I believe if I bought like Facebook at $5,000 and it doubled its price in 2 months and I sold it off because I held it for less than a year, I get a higher tax rate than if I held it and sold it, after a year. But guys, with any of these products, don't just open one up and go buy random shares. You need to know what you're doing or have a general feeling of what you're doing. And the other hard thing with investing too, especially with a brokerage account, because you're paying more attention to that day by day. Sometimes I look at my balance day by day and it drops by several $1,000s and it raises that too. So you have to get used to like looking at your money go up and down, up and down. But you do get used to it after a while because, really the whole goal is, long-term investing. But speak to a financial advisor about that. And the thing is there is a lot of, there's not a lot, but there's risk, right? There's a lot of risk with some stocks and lower risk with others, but there's always risk of losing money and losing all of your money. And any brokerage company and financial advisor will tell you that. However, there's a lot of risk of making a lot of money. All right, that concludes my lesson. I'll go ahead and open this up for Q&A.
Thank you so much, Travis. If you could unshare your screen for a moment. We actually have your first question that came in by email right as the session started. And just to be fully transparent, I have been cleaning the office while you were doing this because I can watch the replay. But the question is, and if you didn't cover it, they wanted to make sure you covered it. It says, if you have an LLC set up, can you make yourself an employee of the LLC and set up payroll? In a sense, you become the W-2 employee, helps with taxes, etc. You set yourself a set salary for the week and then receive a paycheck every 2 weeks. Or you'll need to convert to an S corp. So that's from Terry. What would be your advice on that?
Yeah, that goes in alignment with I believe like the S corp in the 1120s.
Mm-hmm.
And again, speak to a CPA or a financial advisor to see if your business, if that's the best decision for you. Because I just want to mention, yes, that is an option out there. You can become an employee of the company. I know it's got tax advantages for the self-employment tax, but any more information I would give on that, I could, kind of start crossing the line with financial advice and as such, but simply, yes, it's an option, but speak to somebody that's in that profession, whose sole life is to, advise people on that.
Awesome. All right, guys, we are trying to keep this session shorter today because we wanted to come back and simplify things. I see now that we turn on the chat, I see a lot of people saying thank you. Great information, Travis. But I want to ask you guys, if you have a question, go ahead and virtually raise it, because we do have a finite amount of time today to get those questions asked. So if you have questions while we have Travis here, please go ahead and get those hands raised. And I believe there was one that just wanted the chat from Seattle Value Notary, which I know is Kim Nelson. She says, is the SE tax separated separated from your stamp income, if I understood correctly?
Is the self-employment tax separated from your stamp income, like your notarial income?
Correct.
Yeah, so, and that goes back to my example slide. So, keep in mind, you want to understand, how much you made, how many notarizations you did throughout the year. You're going to take how many notarizations you did, multiply that by the dollar amount of your state allowable, and that number is what you are paying federal and state only on and exempting from the self-employment tax. So that's how they calculate that.
The next question is up from Miss Sophia Kelly. Miss Sophia, when you're ready.
Hi, Travis, Ronnie. My question is, you said put aside a little money in your savings account. So how do you know what percentage to set aside?
Oh, good question. That's a tough one, right?
Mhm.
So, I wouldn't be able to tell you an exact amount. Me personally, I put in, what is my percentage? Let me just run it on my calculator here. Yeah, every month I put in 30%. That's, that's safe for me. For all of you, will you need to put in 30%? Again, probably not, because all of you are going to have a lot of deductions, right? Mileage, your notary, exemption. So, but better over than under. And after you file for the first year, you're going to know how much tax you're probably going to pay the next year and a better amount to put in. But to be on the safe side, my recommendation, again, a lot of other CPAs and other notaries may have other recommendations. I completely respect that, but I would say at least 20 to 25% till you file that full first year of tax return and you can see what your profit and loss is and how, much you got taxed. Because, with the self-employment tax that you get tacked on, your CPA, I think he adds that over back into your 1040, and some of it gets written off at the federal level. I was messing around with my tax returns like last year or so, and I saw how that they did that. But just because you have $80,000 in profit on your Schedule C doesn't mean that's the final number, because there's other factors that are going to, reduce that number, like the standard deduction, contributions to a 401 or IRA. But, to sit here and tell you a specific amount, I wouldn't be able to, do that. So, better safe than sorry, 20 to 30%, you're probably not going to go wrong there. And God forbid you pay more, you get a refund check at the end of the year. The IRS doesn't like keep what you overpaid them at. You know, they handle it just like a W-2. If your employer overpaid federal and state and all the taxes, you get that refund check at the end of the year. Or if they underpaid, you have to pay a little bit more than, you know, what you already paid through your employee's paycheck or your employer's paycheck. Sorry. All right, good to go on that one.
We have another question from the chat here, which I think is a great question to address from Desiree Black. I know you covered it, but I want to make sure everybody is clear on it too. It says for cash accounting, if you sent the invoice and performed the notarization or the work in 2023, but haven't been paid yet in 2024, should you still file this?
Okay, give me a second. Let me get my, is that a written one, Ronnie?
Yeah, that's a written one.
Is that in the chat below? Here, can you state that again? Because I have to write this stuff down sometimes just to make sure I'm understanding it right.
Cool. I'll actually just chat it to you so you see it right there.
Yeah, thank you.
On a direct message.
Thank you. For cash accounting, if you sent invoice and performed notarization in 2023, but haven't been paid yet, haven't been paid yet in 2024, could you still file this one for cash accounting if you sent? Okay, so you would be able to no, because there's no expense yet, right? So, I mean, you can and speak to your CPA about this, but I'm pretty sure you can write off the deduction for the notarization. This is where I wish I had Glenn for this one, but just keep in mind on a cash accounting, if you're filing for cash filing, all it cares about is the money deducted from your account that year and that went in that year. Now, as far as the write-off goes, like for the notarization, I don't think you can write off the self-employment tax on it because you're not getting taxed on federal and state on it yet because the cash hasn't hit your account. So I'm sorry, let me read it over one more time. If you sent invoice and performed notarization in 2023 but haven't been paid yet 2024,
can I comment on this as well, Travis?
Yeah, go ahead.
So I do believe they would be able to write their deductions off if they had expenses in 2023. They could write those expenses off, but they would not be able to write off, they would not be able to file on the income because they haven't received the income until 2024. So, you know, right there at the end of the year, you can still write off. So for instance, when I'm doing my taxes now, I'm talking, you know, with the attorney of what we're going to be writing off this year. And I know you guys are working on all the books here, but when I turn that over, anything that actually was paid for in terms of like paper, stamps, you know, any products or services that I use to do that, I can write that off for the 2023 year, but I can't put that as income for until 2024 because it hasn't hit my account in 2024. And I think we're kind of looking at this like as if that I would need to get paid in order to write those things off, but that dividing line would be what year did that debit or that, you know, deposit happen on what you can write off and what you can claim as income. Does that sound fair there?
Yeah, because, you know, it's not so much the year that's of concern of when you invoice them, because that happens a lot. You invoice in 2023, but you don't get paid for it in 2024. If you're not on an accrual accounting basis, it doesn't matter when you invoiced because all you're filing is the money deposited into your account for business income and the money exiting your account for business expenses. So if you had expenses in 2023, you can deduct those for 2023. You just can't, you know, claim the income because that's not paid until, you know, 2024. So, you know, just in, you know, to the Notary Stars and every notary out there, just keep that simple, right? On a cash filing, it's how much that went into your account that year. and how much that exited your account that year. It makes no difference what year you issued the invoice and the signing took place.
And then Travis, we have these two questions go really hand in hand, and I would love to know the answers to this as well. It says, can you, let's start with the first one, and I'm going to take it a little bit further. Can you report the cost of supplies and mileage if you never get paid by the client? So can you write those things
Sure.
if you never
Yeah,
receive the income?
absolutely. Yeah. And again, guys and gals, speak to your CPA about this, but I'm pretty sure I'm right on this. Yes, you can report the cost of the mileage because it was an expense that year that you paid for. However, if you get paid for the signing in the following year, you just can't report the the mileage and the cost for that signing again. You can't double dip. With cash counting, it all works itself out one way or another, because what happens if that title company never pays you for the signing? It's still an expense for that job, and you have record that you did it. And, if you got audited, you'd say, well, it was an expense, but, this grade B signing service never paid me for, the order, but I still want to deduct it as an expense. And I have proof that I did this.
Thank you. And then Nancy's question goes really right along with this. It says, if you haven't been paid in 2 years, can you write it off as a loss? So if you never get paid for the work, can you write that off as a loss?
I believe you can't. I believe that would make sense on if you're filing on an accrual basis, but you're not really, you're writing off the loss of, the expenses already for that year. And I just don't see how there's like anything you can write it off your books just to get it off and not chase it anymore. But I think you would only write that off like your accounts payable and as such if you're on an accrual status. So, pretty much you're just deducting the expenses for that signing. But, anything more specific, if that's not answering the question, I would, again, speak with your tax preparer and, definitely somebody that knows what they're doing. You probably, with self-employed income, guys, I don't get a tax preparer that's like first day on the job. Get somebody that's experienced because it's a little more, challenging. But yeah, I think it's just the deductions and costs that that you paid, for that signing, whatever your losses were, mileage, printing, whatever it may be.
And then there's another question, and it goes along with the question about when to write off. It said, to add to my question, when do I write off mileage in 2023? So that's going to be when you file your taxes for 2023. You're going to write off that mileage. And I do want to say this. So there were actually things like, let's say you've already filed taxes and you are just stumbling upon it this year. You can actually go back and refile your taxes and write off things for, I think it's, Travis, is it 5 or 7 years?
I don't know what the time frame is, but yeah, you can always refile your taxes.
Yeah, you can always refile your taxes. So let's say you did taxes before and you did not know that you could write off certain items. If it calculates up to a great value for you, you can actually go back and refile your taxes. So if you're just stumbling upon this conversation, of course you would want to talk to a tax accountant of that. But if you never wrote off any of that mileage, or any of those things like I did several years ago, and I found out I went back and refiled that year's worth of taxes and actually got money. So you can go back and somebody put in there, it's 7 years.
Okay, thank you.
And I'm just combing the chat, guys. We're getting close to, we're going over time. We promised you guys a shorter session today. So if you have any questions, let's go ahead and raise those hands virtually, because we're going to be wrapping up the meeting today. So we're doing our last call for virtual raise hands. We'd love to hear from you today. Great questions in the chat and support for each other. Desiree, you've got your hand raised. We'd love to hear from you.
Oh yeah, I have a question about, sorry, I had it written in here. So if we're doing a signing, since we can't exempt the signing fee, can we exempt each notarial act, even if we aren't paid for each?
Again, speak to your CPA, but I wouldn't see why not. You know, it's an expense and the occurrence did happen. I don't think just because you haven't been paid for it doesn't have any impact on that, because it's a deduction. The deduction occurred in that year. So I don't think it matters whether you've been paid for that signing or not. But, again, I'll say it till I'm blue in the face. Verify that with a tax preparer. But the way I see it, we got 2023. Let's say you invoice for $200,000, but you only got paid $100,000. But within that $200,000 of invoices, you had 3,000 notarizations. I would believe you should be able to deduct, that amount from, the self-employment tax, because that, quote unquote expense or action did still occur that year.
And Desiree,
Okay.
you wanted to add on that?
Yeah, this is like a side question, doesn't really relate, but the 1099 NEC, when do you think we'll receive this from the signing company? Because I don't think I've received one yet.
Yeah, so typically, before the end of March, you'll get
Okay.
one, but keep in mind, you do want to know how much you made with them, because they may not issue you one if you invoice them for under $600, and that's when you're going to go to your books. And
Okay.
if they don't issue you a 1099, speak to your CPA. Because, when I filed my taxes, my first year as a notary, all my CPA did, she was like, okay, what was your net profit? And I gave that to her in my books. And she just took my 1099s, added them all up. And then she took that amount and then took the leftover and applied that to, what my books had, and claimed it on my taxes. And because I don't think your CPA like sends in your 1099 with your income taxes. And I would have to research more, but conceivably you can file taxes with, not even, getting a 1099, as long as your books are correct. You're just telling your CPA, hey, this is how much I made. That's, really the key right there. I wouldn't rely so much, on the 1099 itself, because I believe you can file before you get all that stuff.
Thank you for that.
Because if your books are right, they're right. I mean, that's what, if in, one way or another, the IRS isn't going to know, right? Unless they audit you and then they start having you try to prove all of that stuff. And they're going to be like, well, I got a 1099 from this company. Da, da, da. It's like, well, here's all my proof that, they're putting too much or too less on my 1099, et cetera, et cetera. That's why, great bookkeeping skills are a must. And guys and gals, I want to stress bookkeeping. And trust me, here at Unlimited Inc., me and Ronnie pay a pretty penny for bookkeepers. Okay. Like,
Well, you
we
pay my
manage-
money for those bookkeepers. I pay you to find them. I'm just kidding.
yeah.
Travis,
Okay.
I want to tell you something. I want to talk about this right here at the end, because I
Sure.
think it's worth notaries knowing. Just 2 days ago, I was talking to one of our Notary Stars who's filed the last 2 years of their taxes, and they did write off every notary stamp against their signing fees. And, it really looks like they've made no money. And the IRS has not processed those 2 years, and it is in pending status if they're going to let that keep going. It's the second year that was the problem, because at some point the IRS does expect you to turn a profit. So if you're writing off every single notary seal and all of those things, and you're, basically like, you owe me money type thing, it may cause a red flag for them to do it. But if you, like Travis said, you have to go through the processes of, if the IRS says, I need to look closer at this, writing off every single notary stamp, it may cause a red flag, but don't worry, because if you have your books and you're entitled to do that, they may just need to take a closer look, and it might like slow down the processing of your taxes. So don't get worried, because they're like, I know I did what I was supposed to do. The other thing is, I just want to mention, because a lot of notaries are like, great, I can, really write this off and I can get my worth, but the flip side of that is, if you write off every single notary stamp think about what you're going to be doing in the future. If you're going to be going to buy a house, you know, in the near future, if you're going
Yeah.
to buy a car in the near future, you want to show income. Because if you have a business that is not profitable or shows not profit for 5 years and you're using that method to file your taxes, when you go to apply for a house, you're not going to have any income to show to buy that house.
Right.
You're not going to get it or that loan. Also, if you're expanding to become a signing service, there may become a moment where you need to borrow money for capital, for employees, computers, phone lines, all those things. Believe me, Travis and I have how many contractors work with us behind the scenes?
Yeah, like 20.
20. We have, 20 contractors plus on the Notary Stars side. As you grow, you may need to take a business loan to cover, certain things. And, we have a new client coming on that could be probably $500,000 a year in business. We will need to hire people right away and need those salaries up front while we're training and doing those things. So we may have to just borrow something to put that in place. And so if we file every single notary stamp, and show no income, there would be no way to do those things. So always keep your plans for the future in the back of your mind if you are going to use that method. Would you agree with that, Travis?
Absolutely. And there's nothing against not writing off every deduction that you qualify for. And that's a big thing when I don't want to say engineer my tax returns, but I don't write off a whole lot just because of the home buying thing. I want to start, buying investment properties and as such, and I need that line on that Schedule C to be a nice, pretty number and a nice, consistent number. But as I mentioned in my lessons, I worked in lending. I declined so many self-employed borrowers. That's first thing they would say to me. How much do you make? Oh, make $80,000 a year. Okay, can you send me your tax return? I grab that tax return. The first thing I look at is line 31 on Schedule C to really see what I'm up against. So just keep that in mind. Taxable income is what the lenders are going to use to qualify you for a loan on your tax returns.
Got it. Travis, I want to say thank you for this today. I know how hard, if you guys knew how hard he worked on this, everybody in our accounting department, those 3 poor girls had to listen to this presentation.
Yep.
Over and over and over again. They called and begged me. They said, don't we have any kind of HR rule that we have to listen to this many times this week? He really practiced. He doesn't come on as much as Beth and I. So, he really wanted to come up here and do a great job for you guys. You can turn on the camera for me and Beth and we're like, here we go. But, Travis really wanted to, bring this, he, like, after the last session, he called me and he said, I want to do this because I feel very passionate about this. He said, oh, we had great information, but he goes, I wanted to make this a little bit more simple. And obviously you achieved your goal, Travis, because we've gotten tons of thank yous in the chat for you. And I know we'll get emails and things like that on it. Guys, I'm going to post in the chat right here at the end. I'm posting the YouTube video of the original session that we did. If you want to go back and watch the 2+ hour session, Glenn and Miss Sue really gave a lot of information. Travis wanted to do it with one straight shot, give a straightforward, here it is, method of doing it. I think you nailed it today, Travis, and I'd like to ask everybody to turn on their cameras if they can, so that we can give Travis our signature wave and thank him for putting this together today for us. Thank you so much, Travis, for putting this together and bringing this to Notary Stars. We would love to see you come back more often. You guys don't know this, but I keep pulling pulling at him saying, hey, they love when you come. So just think about coming back and doing more of these for us. We really appreciate it. And guys, I hope you have a wonderful weekend. If you want to watch the replay, if you came in late, I'm going to get this up on YouTube as fast as possible today. So if you need to see the first part of it, just hop over and click subscribe on our YouTube, and we will be releasing this in the next hour or two. It does take an hour or so to get it converted and for the HD to kick in so you can actually see the slides. So about 2 hours, but if you subscribe there, you'll be able to get it. But you also have the original one that's posted in the chat now. So have a wonderful Saturday, everybody. We really appreciate you spending your time with us today. Thank you, Travis.